Hello everyone, this is Matthew Frailey with BreakpointTrades.com. Real quick, last Friday late, most of you would have seen this on Saturday morning, I put out a video on YouTube. I specifically focused on silver. I also discussed other precious metals, but you can see my YouTube video there from late last Friday. Talk about silvers in a coiled spring, a major move's about to happen. And this week, precious metals have really taken off. And of course, silver broke out of that pattern very nicely. Long term, it's got a long way to go. Here's the updated chart of silver. You can see it breaking out of this very bullish ABCDE triangle pattern. Beautiful breakout today. Again, congrats if you watched that video and you've been positioned in this area or you went more heavy into it coming into Monday. Again, this is Matthew Frailey, founder of BreakpointTrades.com. We've been breaking advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like you see here with our 21 mean reversion systems. And of course, our awesome KISS systems. You can still check them out. Go to Systems, KISS STS tables. And we have a mechanical system, a universal system that we run on 750 stocks and ETFs. It gives you totally objective buy signals, gives you stops, tells you when to exit. You can see these awesome trades. Amazon, our system's up 37.4%. It went long on October 30th. It's raised its stop 15 times. STS, that's smart trailing stop. And of course, things like NVIDIA up almost 80%, stuff like that. So again, awesome resource, nothing out there like it. You should check it out. Okay, so back to this video. This is our backend recorder for our standard web page newsletter format for our subscribers to our website. And I'm gonna go ahead and get this recording started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, April 3rd newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Again, as far as the market, today was a very minor update for the major indexes, save for the Dow Jones. It was slightly down, but for the week, all the indexes are quite negative, okay? We still haven't had any major breaks of support areas on the indexes, so they could still go up to make another high. That said, you can clearly see there's been distribution going along in the market. Things are getting choppier. I do believe we're getting close to some sort of correction. I think we'll have one sometime this month. Remember this week, the major news item is, of course, on Friday, the monthly job payroll report. And of course, Fed speak. We've had Fed governors speak this week. So here's what's left for the week, Thursday and Friday. Again, all that glitters is gold and silver. One heck of a move in the precious metals. As you know, we've been focused on this area heavily. One of our systems, the BPGDM system, gave an objective long signal on March 1st, so over a month ago, and that area has had a substantial move, the precious metal stocks, and of course the metals have been moving. Silver really broke out in a big way today. Again, I know a lot of people, a lot of the crypto nuts have been saying that gold is dead, but I've been saying for the last year that, gold would eventually have its day. As a lot of these other commodities are, and we're seeing that now. Again, we're seeing all these moves in crude oil, energy stocks, DBA, agriculture, copper, coca, uranium. All these are inflationary items, and I think they may eventually cause the Fed to pull back somewhat on their future rate cut promises. We'll see. But let's go and get started here. First off, as I already discussed, this is my slide from the video I put out on late Friday night. Most of you would have seen it Saturday morning. But again, I talked basically, this is the thumbnail for my YouTube video. It says silver is going to make a substantial move, 4-year coiled pattern, 4-year coiled spring pattern. And it broke out in a nice way today. So image number 3, here's the weekly chart of SLV. That's one of the silver ETFs. AGQ is the leveraged play. You'd want some leverage. But you can see beautiful breakout from this coil, and this was the bullish labeling, A, B, C, D, E. Proper coils are 5 waves, and you have the wave E at the bottom. That was a bullish setup. It broke out in a big way. Again, this could run for a long time, guys. I think it could be a major swing trade. Again, it's going to get overbought short term, but longer term, I think this is a major swing. Next. Image number 4, here's an image from our KISS systems. They've been killing it as well. As you know, they have caught this uptrend beautifully from the late October lows. You could see all these amazing gains. And here's some of the new ones that had stops today, new stops. Amazon had a new smart trailing stop, moved up from 168.80 to 173.20. That trades down up 37.4%. And it's been long since October 30th. So quite a long time. It's raised its stop 15 times. GDX, GLD, SIL, SLV, those are precious metal items, not surprisingly, and they've been moving up nicely. SIL, that's a silver miner ETF, silver miners. You can see it's up almost 21% from its entry. SLV, silver ETF's up about 12.5% from its long entry on March 3rd. So congrats if you've been following these. If you're only watching us on YouTube, honestly, you're missing out. If you're just watching us on YouTube, you really should take a membership at breakpointtrades.com. We have pretty awesome stuff. We've been doing this a long time. Next. Let's go ahead and move back to the general market newsletter. So image number 5, this shows you the index sector table, what transpired today and this week. You can see again, today the major indexes were slightly up. The Russell led. The Dow was slightly down. For the week, everything's down with the Russell and the Dow leading to the downside. As far as the major market sectors, the 21 sectors, more were up than down. Again, mostly small moves here. As you can see, most of the moves are less than 1%. Retail, consumer staples down about 1%. Metals and mining, again, that's contains a lot of the mining stocks, stuff like that. They were up big, 2.19%. Energy area continues to be very strong. That area's had a phenomenal move. Currency-wise, US dollar, nice pullback today. That helped rock the precious metals again, down 0.2% for the week. Cryptocurrencies, they've been choppier here lately. Ethereum had a perfect bear flag, which has been playing out. Bitcoin rallied a bit, but it's not back to highs yet. It's struggling. Commodities, mostly to the upside here. The index, DBC, up 1.2%, 2.6% for the week. And crude oil up 0.3% today, up 2.7% this week, all inflationary items. Natural gas down a little bit today, but it's up over 4% for the week. Copper up 3% today, 4.7% for the week. Gains in a lot of these agriculture items. Precious metals, of course, are rocking. Gold up 3.4% already this week. GDX, the miners, up 4.8%. Silver up 8.7%. And as far as the bond market, TLT down this week, and 10-year Treasury yield is up. That hasn't hurt precious metals, though, has it? Next. Item number 6 shows the economic news calendar. Tomorrow will be in Thursday. We have initial jobless claims, natural gas inventories. Friday, of course, is the big job report. We'll see how the market reacts to that. And let's go and jump to these index charts. First chart below, item number 7, is the weekly chart of the 5 major indexes. You can see big down week for the Dow so far. Again, the 9-week EMA is your important support on the weekly. We're still holding that for now. Be testing it. We're obviously holding on the other indexes, the NASDAQ, the S&P. Next. Chart number 8, here's the Dow Jones. Again, leaking oil. If this could still recover again, I wouldn't be surprised. I think that 40,000 round number would be a nice target. But again, it's leaking oil here. It's testing this channel again. Again, you have the 50-day moving average down here. That's obviously a big support. We have a pretty obvious MACD divergence here. The 60 stochastic, remember I talked about this, it's been embedded above 80 for a long time. It's retesting the 80, so it is getting vulnerable here, definitely. Next. Moving on to the S&P 500, chart number 9, here's the daily chart of the S&P. Again, still haven't lost this critical support area right around this 20-day moving average. We're still holding that. Remember, to objectively break this uptrend symmetry, the uptrend we started in late October, we need a pullback larger than about 130 points. That's been the largest pullback in this uptrend, only 130 points. Once we have a pullback larger than that, that'll put very high odds on the next rally forming a lower high. We still haven't done that. We haven't lost the 20-day. We're still holding the RSI trend lines here. Again, we're either going to rally back to another high here or we're going to break support. We'll see right away. Next, number 10, here's that S&P chart. This is that mean reversion system chart that I gave you guys a while back. It focuses on the 60-link stochastic, and when it's embedded above 80%, when it's in such a condition, you can get very objective long signals for mean reversion signals whenever these fast indicators get oversold. The 2-length RSI, 1% 5, fast stochastics 4. You can see all these objective buy signals you had. In fact, we've had, I guess, 11 of them now. Yesterday, the RSI2 got oversold. The other indicators didn't. If you took that, you have a winning trade today. That said, remains to be seen how this trade goes. This system doesn't give you the exit parameters. That's kind of up to you. It gives you the entries. One idea would be simply your exit would be whenever one of these fast oscillators get back overbought, or maybe trail a stop below the candle low each day, something like that. But again, it's getting very objective signals. Eventually, usually what happens is the last signal ends up being a failure. Because this trend will only go on so long. Eventually, it'll end, just like all trends. But that's fine. Eventually, you'll stop out. But in the meantime, it's given a lot of great trades. Next, image number 11, here's the KISS system. Again, still no changes. Smart trailing stop remains up around 5,080. Again, so it's giving it room. Again, the system went long there on October 31st down here, so it's done an awesome job catching that entire uptrend. Next, chart 12, here's the 4 time frames. So ATR is your big support on the daily. Same on the half day. See, we had a couple buy cycles there. We've bounced there a little bit from those. We've bounced from the buy cycles on the lower time frames. We're below the ATR on those time frames. Next, chart 13, here's the 2-hour view. Again, we have this channel we've been showing. We kind of slightly broke it the other day. I've left the same line in here for now. You can see we've bounced back, but we're still struggling here. So it either needs to regain this strongly or it could fail here like a little bear flag. Moving average ribbon here is still bullishly stacked for now. It's in a pinching formation, which means it's kind of at a breakpoint. It's either going to start unfolding to the upside again for another upside move, or it's going to break down. All right. Next, image number 14. Here's a 15-minute chart. Now, if the market goes on to make one more high, I know Steve favors that. This would be maybe one wave count. This pullback from the 52.64 high would be an ABC. Then the bounce up would be a 1, and then a little ABC down of 2, and then we go up in 3, 4, 5, and make maybe one more high at 5,300. Then I think we have a correction. But again, that's if this is the correct pattern. We'll know right away. You can see we did bounce off some support yesterday, previous resistance. Next. Chart 15, here's the triple Qs. Again, they're still holding this same pattern here for now. As Steve showed, either we get one more rally up, and I think if we get one more rallied up, that may be it, or we break down now. Nothing's been decided yet. For now, we're holding this support trend line. Moving average ribbon is still bullishly stacked. Next. Chart 16, here's another way to view this. I showed this on Monday. No changes here either. Next. Chart 17, here's a 2-hour chart. This also shows where you could have a deeper pullback as a wave 4, then another move up in a 5. Again, don't get too bogged down into these guys. I'm just showing you really nothing has changed yet with the trend. Next. Chart 18, here's a half-day chart. I went ahead and left the same channel here. So again, we broke the channel slightly, bounced back, retesting it. So here I added a little kind of small downtrend channel to watch. If we were to break back up above that, that would be positive. But we could still easily fail here too. But again, nope, nothing's changed yet. Chart 19, here's that weekly chart. As I've been stating like a broken record, we've been working on this wave 3, major wave 3 of 5. Once this is ended, I'm looking for this major wave 4 correction. Okay, it could be 8 to 12%. Okay, so it should be a pretty good one, but we don't know if that has started yet. way too early to say, but we're just monitoring that. Next, Charter 20, here's the KISS system for the Qs. Again, no changes. Smart trailing stop's been there for, seems like a couple weeks now, 427.70. System, of course, had an excellent entry down there, a couple days off the October lows. Charter 21, here's the 4 time frames. Again, Qs have been weaker lately than the S&P. You can see on the daily, it had an end of bull cycle, resistance cycle, and prices pulled back from that since last week. And ATR is still your big support, still your support on the half-day chart. And moving on, taking a look at some of the big stocks, guys. These are still holding up for now. Here's NVIDIA. Now, NVIDIA is slightly below its 20-day moving average. Notice you have the 9 and 20 pinching together. It needs to hold this. If it needs to hold this and go right away, if it can go right away, it could still make another high as a wave 5. Otherwise, we've got a wave 5 here. We're below the 20, so if we start to let loose here, then likely that 5 is in, and it'll test the 50-day. Next, Charter 23. Here's NVDD. That's the inverse ETF for NVIDIA. If you want a way to short it, say for like an IRA account where you can't short this pattern, you can see it kind of has a bullish look to it. If it can break up through this pattern, that's a way to short NVIDIA. If you are not able to short, like I said, in a tax-free account, that's an inverse ETF. The other FANG stocks are holding up fairly well today. Again, a lot of the big cap stocks did well. So here's a Google, big move from that 200-day moving average retest back in early March. Had a big rally on Monday, still holding up here very well. Charter 25, here's Amazon. Again, it's still holding up very well. Charter 26, here's Meta. To me, this looks like a bullish coil forming, held that support. To me, this looks like maybe a 4th wave coil, and we get another move higher for a wave 5. So that bodes, for the market maybe making still one more high here. Charter 27, Microsoft still holding up here as well, still holding that major support. And Apple, Crapple. Now, it did bounce today, but again, this is a demand zone, but it's definitely weak. Remember, we had it as a short back here in late February. It gave you a nice trade, bounced, retested that previous support, became resistance. Apple's got a lot of headroom, and you can see that. Next. Moving on, Charter 29, here's IWM. That's small caps. Now, to me, this is definitely vulnerable. This would be the bearish labeling, this A, B, C, D, E. Remember, these wedge patterns are 5 waves. That would be the bearish view, and under this count, the high would be in. Now, it bounced today logically off this uptrend line, okay? But if this is the correct count, then what I would expect is a lower high in here, okay? So let me draw that out here. So, if market rallies up again, if this is the correct count, it can form a lower high in the pattern and then bust. You can see a very obvious MACD divergence there. So erase that. Anyway, definitely one to watch, guys, but we did bounce off support today. Next. Charter 30, here's a 30-minute chart of IWM. Here's a demand zone down here. Now, we bounced today. I added some fibs here. If it forms a lower high, these could be some areas to monitor. All right, that does it for the major indexes. Let's move on. Charter 31, here's the VIX. So the VIX lately has been sort of testing the upper and lower Bollinger Bands, not closing above or below them, and then reversing. You can see the VIX over a week ago was at the lower tested the lower Bollinger Bands, recovered. Yesterday, it tested the upper Bollinger Bands and pulled back. Next. Now, here's an interesting chart. Here's the NYSI 9 EMA crossover system. Today, we got a slight cross below the 9 EMA here. Remember, I've been saying I've been looking for this to be possibly a good short signal on the market. You could take this signal, or if you want to wait for confirmation, a confirming bar. So this is called my whipsaw confirmation methods. What I do is whenever it crosses, I draw a line. So this would be a short. So you draw a line at the bottom low of the candle, today's candle. You would need a close below today's candle low to confirm it, okay? So like, for example, back here, whenever you had a bearish cross below this where you had this up candle, price never went below that on a closing basis. So that sell signal never confirmed. And so the buy signal back here in early November has been in place this whole time, all right? So watch this. Not gonna look at any other indicators. Let's go and move on. Chart 33, here's high yield corporate. It's been leaking oil a bit, but bounced back today. Here I extended this trend line of this coil as a possible support. Next, chart 34, here's TLT 20-year bonds, been leaking oil. Otherwise, it's still in the same downtrend channel as we've been showing. Chart 35, here's the 10-year treasury yield. Like I said, rates are opposite the bonds, so it has the same channel pattern, just inverted. Okay, rates were down today a little bit. Next, chart 36, just a few of these sectors. Again, XLC, that contains a lot of those FANG stocks. You can see, still doing still very strong. Next, chart 37, here's financials. In this very steep wedge formation, you got some active divergence, very steep wedge. It's still holding in the wedge, but it's getting near that trend line now, important support. Next, chart 38, here's XLE Energy. Like I said, this area's been absolutely on fire. Look at these energy stocks, just skyrocketing. Congrats if you've been in this. It's been awesome. Next, chart 39, here's the BPNER. That's the bullish percent energy percent index. That's our energy system. Gave a nice buy signal back here in early February, and it's done nicely now. Right now, this BPNER is up here on 89%. So it's getting close to this overbought territory. Next, some individual energy stocks. Here's ExxonMobil. Again, we had as the long way back here in early January off these dojis. One hell of a percentage move. So our long trigger was down there around the 96 area, and it's now up close to 120. So one hell of a percentage move. And you also had a dividend in that time in February. The next dividend is March, April, May. So every 3 months. Next. Now, in ExxonMobil may be getting close to a little pullback area. So here's a big supply zone up here. I zoomed out on ExxonMobil. You can see this is a bigger resistance area. So up in here somewhere, you could get maybe a quick short. Again, to me, I would just view it as maybe a quick short, not some major sell-off like this. Maybe you get a pullback like that or something, then go up again. But you may get a little short opportunity up here, area to take some profits. All right, so something to watch. Next, let me delete that. Chart 42, Valero. That's the other energy stock that I've had on the watch list since February. This cup and handle pattern, and man, look at this puppy. It just continues to go up yet again today. Awesome trade. Next, moving on to commodities. Chart 43. Here's the index DBC. Again, it's a collection of a bunch of commodities. So far, it's up 2.6% this week. You have a big weekly coil pattern here forming. Chart 44, crude oil up yet again today, slightly over the 61 fib now. Next, chart 45, UNG, natural gas ETF, pulling back today. But again, you had a nice little low last week. I mentioned that if you took that as it could have been a swing trade. Natural gas is notoriously difficult to trade, guys, but looks okay for now. Just have your stops in place if you are long some. Next, chart 46, copper, big up week, up 4.7%. Remember, it broke out of this coil about a month ago, pulled back a little bit to the 9-week EMA, big pop today, looks great. Obviously, the copper stocks have been rocking and rolling. Here's FCX, Freeport McMoran, big move up in the energy stocks. SCCO is another one. Chart 48, DBA, this has also been on fire, the agriculture ETF that I put out back in January. The cup and handles played out. Now, so far this week, again, it's had a hell of a run. So little doji here forming, maybe close to some sort of pullback. Chart 49, here's the daily. Again, for now, it's still holding the 9 EMA. That's your first support. And a strong uptrend, guys, that's always your first support. I want to keep it simple. Next, chart 50, here's Coca. Finally pulling back today. This has been going parabolic. Look at how wide the moving average ribbon. In fact, I almost shorted Coca futures last night. I've never traded those futures. And even if you only trade one contract, it could be quite a bit of money. So I was a little scared too. I wish I had done it now because that would have been a nice trade. But going parabolic, I mean, this needs to correct. Chart 51, here's uranium, breaking out nicely. Remember, nice move this week, expanding volume. We put it out as a long back here on the demand zone. Chart number 52, here's the monthly chart. Remember, I've been bullish on uranium since late 2020 when it came out of this, well, long-term Weinstein-like base. Rallied up, formed another coil. We were bullish again last year, broke out. And honestly, over time, I could see it going up here into the 40s. Next. Chart number 53, here's CCJ, one of the uranium stocks. Again, very similar to URA. First off, your objective long entry was right here off the 200-day moving average. You go long over the doji high, put a stop at the low, and then finally, you can see it was struggling with the 50-day moving average. It finally took that out this week and rocking and rolling, expanding buying. Again, guys, these moves in commodities are inflationary, and they may cause the Fed to eventually reconsider some things. Next, moving on to crypto, here's Bitcoin. Right now, Bitcoin's forming a pretty obvious coil pattern. Let's see which way this breaks. Chart number 55, here's Ethereum. This had an absolute textbook bear flag, wave B, been playing out, as you can see. Some of the crypto stocks, they've really had nice corrections. Here's MSTR. Again, we had it on our watch list back here in the 500s. It essentially went up 400% to 2,000. Just insane moves, guys. Insane. Anyway, so far it's had symmetrical pullbacks here, but it had a pretty good divergent high here. Look at the divergence on the RSI, MACD. So, this may not easily go back to the highs. It may need to have a decent consolidation. Chart number 57 here is CLSK. This is one we liked several weeks ago to make a new high, and it did, but that made a wave 5, and since then, hope you took your profits. It's come down quite strongly. Next. Chart number 58, US dollar, pulling back from a little supply zone right here. That helped, of course, energize the precious metals market even more today. Next, chart number 59, gold. Again, just rocking and rolling. Closing up now over $2,300 an ounce. I think gold's eventually going to go to 3,000. I've been saying that since last year, guys. So I've been on record. You can go back and listen to my old videos or newsletters. Anyway, stocks have been leading here. That's good. We'll see how far this initial trend goes. You had an excellent objective buy signal right here on this channel break and on these trend line breaks. Next. The wave count that I've been showing is on this GLD chart. Wave 1, 2, 3, 4. And this was a good labeling I put. I labeled that as a minor wave 1, 2, 3. So this is wave 3 of 5. Now that's important because gold's eventually going to have maybe, a little wave 4 pullback here, right? But then I would expect it to go up again in a 5. So any day, maybe even starting tomorrow, maybe we'll see a little wave 4 pullback. It is getting quite extended here, but it's still very strong, and this wave count doesn't seem completed yet. Next, talking about silver. Here's silver, this bullish labeling ABCDE, where E was a higher low. Beautiful breakout from this weekly pattern, textbook. Chart number 62, here's SLV, one of the tradable ETFs, beautiful break. AGQ is the leveraged. Chart number 63, here's silver on the monthly. Remember, I've been talking about this 4-year coil pattern, energy building. Well, finally starting to break this coil. Now, again, it's only April 3rd, so, could the candle still close back inside the coil later this month? Yes. But for now, good sign. Again, guys, this could be a major swing, maybe one you can hold for a year or two. I think silver could rally into the 40s and really actually test those 50 all-time highs. Remember, silver hit $50 back in, I guess it was the early 80s, late 70s, when the Hunt brothers cornered the silver market. And then it wasn't until 2011 it hit $50 again. Well, I think that area is going to get hit again. Okay. Next. Chart number 64, here's the SLV on that same monthly chart. You can see the nice clean break there on the monthly. Again, it could have a long way to go, guys. Let's take a look at some silver stocks that we've recommended. Here's EXK. We had this as a long idea back in February. You had a nice clean downtrend line here, and on the ratio, it broke that on March 1st. That was your trigger right here. And look at this puppy, guys. You bought this in the $1.60 range. It's now at $2.80. That's almost a double. One hell of a move. Next. Jarbert 66, AG, this is AG Silver. This is a weekly chart. This is one I put out over a week ago. I said this looked like a low risk play. You had a weekly wedge that had been forming for 1.5 years. Well, look at this. This week, it's up 27%. Congrats if you bought this. The other one I mentioned was CDE. That's another big silver stock. I mentioned it's forming this big weekly base. Big move this week. It's up 22.5%. Here's the daily chart. Again, you had this kind of bullish rounded bull pattern, and look at this gap up and big pop today. Next, here's GDX. That's the gold miners ETF. You know, remember this broke that weekly coil last week and following through now this week. Next, Jarbert 70. Here's GDX on the daily. Remember, we had a demand zone here. Price held that. We had the objective buy trigger on this channel break and on the GX GLD trendline break and the RSI trendline break. Rallied up, held that 200-day moving average. This is a supply zone, and we're taking that out now. The ratio also, the stocks have been leading on this move. Jarbert 71, here's the other GDX chart. This is one Steve discussed on the weekend where we're going up either in a wave 3 or C, and that's obviously playing out. Jarbert 72, here's a 2-hour view. Had a nice little coil there, which busted out in late February, or late March, I mean, rallying up. Getting a little overbought here, but again, what can you say? Next, Jarbert 73, here's the BPGDM system. Remember, guys, I pointed out this system back in late February. It gave an objective buy signal on March 1st there. This is an absolutely clean chart. Again, it's a bullish percent chart. You know, it can only go from 0 to 100%. Again, while not always perfect, you can see a little whipsaw here where it gave a quick buy and sell signal mid last year. Look at all these amazing buy and sell signals. They've just been very objective, and that was an excellent buy signal. The nice thing is, well, first off, this has now moved up to 64%, so it's come a long way. It's still not in overbought territory, but so we still have room, but it's come up quite nicely from that low. Very objective. Let's take a look at some of the other gold stocks that we've had on our watch list for the last month or more. Here's AU, Anglo Gold. We had it as a buy on this coil back in February. Rallied up to the supply zone, pulled back, held the 20-day, rallying to a new high again. Now, there is some MACD divergence setting up here on this next high. Jarbert 75, RGLD, another one, rallied off the demand zone, rallied up, formed the bull flag, rallied up to this next supply zone. Jarbert 76, GOLD was one I've been shown recently as well, kind of an inverse head and shoulder pattern. It broke out last week. Nice follow through. Jarbert 77, Newmont, also moving up here. Now, Newmont's the largest component of GDX, and it hasn't been moving as strongly as the other gold stocks. It's kind of a dog. Jarbert 78, MTA, this is one I mentioned over a week ago. Had a nice little bull pennant here. Nice breakout this week. Long-term resistance now up here in the 4 range. That's a good percentage move. It gets there. Jarbert 79, MTA on the weekly. Again, this was a major important support area. You can see it go all the way back to 2017, tested many times. So it was a logical area to take some down there. And look, this thing could go a long way over time if it wanted to. All right, guys, congrats if you caught some of these precious metal stocks and our trade ideas. Let's move on to the final trade ideas. So here's some recent ones. CLS, Steve had this last night in his watch list. Nice breakout. It was a beautiful, nice, clean setup. Nice move. Congrats if you got it. Next, Jarbert 81, ESPR, another one from Steve. Nice breakout today. Off the highs, but it gave you a nice trade. Volume patterns are really good here. So even if you're still in it, I think it looks okay. Jarbert 82, CENX, that aluminum stock I put out over a week ago. This thing just continues going up, 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 and away. Jarbert 83, Advanced Auto Parts. Remember, I had this as a long back here in February in this little channel. Essentially a big inverse head and shoulder pattern. It's been pulling back here, consolidating the last few weeks. I keep showing it because this could be setting up a 4th wave right around the 220-day moving average here. You may have a low risk buy for another pop. Jabber 84, here's a couple of shorts. W Day, we had to put that out last week. It triggered last week. It's been working lower from that bear flag. Jabber 88, PANW was a short I put out on Monday. It's been playing out as well. It's now down slightly below its 200-day moving average. Jabber 86, FMC, I had this last week. It actually broke down instead, as you can see from the coil. Jabber 87, SGML, this little basing pattern I've had on the watch list. It's been moving up if you bought it on that little trend line break. Here, otherwise, it looks like basically a horizontal rectangle pattern. Needs to get over this 50-day moving average. Volume patterns are decent, though. Jabber 88, ADI, it's been on a list here. It seemed like a couple weeks. You could have bought it at the support trend line, like I said, a week ago. It rallied up to the top of the trend line. That was the area to take profits. So it's still ping-ponging between the trend lines. Eventually, it will break this pattern. Jabber 89, CRNX, it's been on a watch list, trying to break this resistance a little bit today. Volume coming into it. We'll see if we get follow through. Jabber 90, WFC, it's been on the list. You have the right now you have the 9 and 20 pinching. You got a tight little pattern here. The bullish view would be this is some sort of fourth wave, and we get a pop here. Again, trade the direction of the break. Could go either way. Jabber 91, ANF, Abercrombie Fitch, one hell of a rally. Right now, it's setting up into a coil pattern. It's a bit early in the coil. It may need to chop around in here a bit, though, before it breaks. Jabber 92, Nova, it's been on the list. It's down here to support. Volume patterns were kind of interesting here, so could be a low risk support here with a tight stop. Jabber 93, NRIX. Here's another one to watch, one from Steve, if it can clear this trend line. I didn't add any new ideas here tonight, guys. And again, obviously, we want to keep an eye on these inverse ETFs like SPXU. Slight poke out of the channel here, but down today. It needs to clear this 20-day moving average, just like the S&P. Jabber 95, here's SPXU on the 2-hour view. Again, testing that channel area. And Jabber 96, SQQQ, inverse ETF for the Qs. So we'll keep an eye on these, but you can see they are getting tight. Eventually, they're going to get a move. But again, the market could still possibly have one more pop. We'll see. And again, guys, that'll do it. Thank you all for all your support, and talk to you next time. Take care.